Hello, this is Acid Trading, and today I'm going to talk about daily candles for daily bias. So this framework consists of relevant swings and failure swings. If you do not know that, well, go practice it. If you don't know the difference between the relevant swing and a failure swing, either ask me on Discord, or if you want, comment down below and I'll make a proper short video on failure swings and relevant swings, the difference and how to mark them on the chart. But if you are familiar with it, you're going to get familiar and going to get a good framework on your daily bias. Let's go with the continuation. This daily candle has its high and has its low. We see that the next day closes strongly with a displacement above the previous day high, meaning if it closes above or below a previous day low with displacement just like this or just a little bit like that, meaning it's a continuation signature, means that afterwards, I'm going to talk about it later, we're going to use the equilibrium of the candle's range to frame the continuation even higher. This framework stops working when we have 3 daily candles closing with displacement. Then we have reversal. Reversal is fairly easy. We see that we have the previous day high and previous day low. We close inside the candle's range, meaning we don't go above the previous day high, we close just a bit inside. So if we close inside, we are most likely to go below, again respecting the candle's equilibrium, the candle's range. Then we have the consolidation. Consolidation, as said in the phases of price video, we have the fact that we aren't going from anywhere. We have previous day high, previous day low, and these candles are just not going anywhere, right? So we just want to see, in this case, some form of liquidity to get taken in even the previous day high or previous day low to get taken out, and then after it got taken out, we look for either a continuation signature for a continuation higher or lower, or a reversal signature when price closes inside the previous day higher or previous day low. So we just reverse, right? AMD or a true breakout, just like said in the phases of price video. The equilibrium importance, as I've said before, we have the fact that equilibrium plays a big part on either bias and intraday framework. So, for instance, we have previous day high, right? We've taken out some relevant key level, then we displace higher, closing above previous day high. Then if I want to see a continuation signature, I want to see the respect of the equilibrium of this range. So I measure with the Fibonacci tool 0.5 from the high to the low. This is being the equilibrium. I want to see a open, low, high close as the continuation, since we're aiming for longs. We have a down close candle hitting a relevant key level, then we displace lower again, and with the third candle I want to see an open high low close respecting the equilibrium of the range. Now we have the chart examples. We see that on a continuation, right? Well, this is a reversal, of course. We just close inside the range of this candle. But then we have respect of the equilibrium and we continue displacing lower. Reversal. With a reversal we see that we close inside the range again. Then with this candle we don't do really much, meaning if I want to see a true reversal happen, I want to see the respect of the equilibrium of this wick, be respected for a continuation higher. Then we have the consolidation. As said before, we aren't moving anywhere. I want to see the relevant swings get taken out so that we have a better framework to work with, right? So this is it for this video. Daily candles are fairly easy. You need to focus on previous day highs, previous day lows, or even previous week highs and previous week lows. Use afterwards the equilibrium. Be attentive to the equilibrium of the candles and to the closes that they do. That was SW, and see you next time.